Hello and welcome to the Gold Coats and Guns Market Report for today, January 17th, 2021. My name is Tom Luongo. We've got a lot to talk about. It's a beautiful Sunday morning and it's cold as you get out here in North Florida. Gotta love that global warming. I want to give a big shout out to all the new patrons. We've had just a slew of them come in over the last couple of weeks in response to the articles that I published, and I do want you all to know that I appreciate every one of you. I don't tend to want to, I don't do the QTR thing of shouting out all the new patrons. I think that's kind of gauche, actually. I'll be honest with you. But I do, I'm extremely chuffed to see the response that's coming in. I want to say one other thing to many of you. I have a lot of people here who are very passionate about what I do and about this community, about the group and everything else, and they would like to see me with a wider audience. Frankly, I don't. And I'm going to make this abundantly clear. It's okay if we travel somewhat below the radar. This is not an environment where being an alternative voice or being a dissident or whatever you want to call it is a good thing with a powerful platform. A dissident with a powerful platform is a tall poppy that needs its head chopped off. And I'm happy to stay just below the radar, just annoying enough to be relevant, but not be actionable. And so I have very clear and definite goals in terms of the size of this community that I would like it to be. I hope that it, in many ways, I almost hope that it doesn't get beyond that level. And I don't think it will. And there's a reason why that is. It's why I keep the content as high concept as I do. I don't try and popularize what I talk about in ways with simple marketing techniques and what's the word I'm looking for? Copy speak, right? The only thing I do copy speak wise is the once a month article, an email that I send out to all of my mailing list that the new issue has been published. Okay. I do this on purpose. Now, you all know that I have a partner behind the scenes, and he has all other plans. And so 2021 may see some changes around here, and I'm open to those changes. But at the same time, I'm okay with flying below the radar. And I can tell you that, it is what it is. And I prefer it that way because that way they'll leave me alone. And then we can continue as the community that we are to educate as many people as possible, but do so in a much more kind of decentralized way. All right, with the opening statement done and my phone's notifications silenced, let's go on to the talking points for the morning. Two very important statements this week by central bankers regarding crypto. Christine Lagarde, the head of the ECB, personally chosen by Klaus Schwab to run first the IMF and then the ECB, is as big a political animal as you will find. She makes Angela Merkel honestly look like, look like a naive, a naive county commissioner, right? Lagarde is as vile a person as you could possibly imagine. Okay. When she speaks, Klaus Schwab is talking. When she speaks, Soros is talking. When she speaks, the whole of the European oligarchy, old world, old money European oligarchy that wants a restoration of their global power is talking. So when she says, well, Bitcoin has been involved in some very ugly things, and we have money laundering issues and the variety of the rest of it, and there needs to be global regulation of these markets. Now, that's an important statement, and it's an important threat. There's no way to argue that. It's a threat. It's a sincere threat. Okay. And I've been waiting for this threat for months from her. What a shock that it comes, once we're past the worry about Donald Trump successfully challenging the election in the United States. We have the restoration of the Obama regime. We have the restoration of the Davos crowd and the U.S. deep state, which are two halves of the same coin, in charge in the United States against the popular will of the people, just like we have, for the most part, the European Union in charge of everything across Europe, no matter how much the people don't want it, right? We're seeing increasing levels of protests and political uprising against various major players within the EU, and it doesn't seem to matter, right? Okay, so Lagarde saying this is telling you that they're going to push for global standardization of quote-unquote crypto or digital currency legislation. That's, of course, they're going to couch it as a way in order for them to all issue their own digital currencies, and which will advantage their digital currencies at the expense of the private digital currencies, which brings me to the latest statements that I read on Cointelegraph the other day from Jay Powell, chairman of the Federal Reserve, who said, I'm really interested in Bitcoin. He's like, Bitcoin is what it is. It's not that important. What's more important is the stable coins. And what's more important is the stable coins that are issued on top of Bitcoin are the actual problem that we've always seen in the past, that private stable coins or private money always has the problems of potentially being fraudulent or having these other issues behind it that undermine trust in the entire monetary system because they compete with the governments. And he's, of course, as a government minister, he is a man who believes and made it abundantly clear that he believes that money can only exist in a trusted state if it's backed by the state. Now, there's some very compelling arguments for this because the state has all the guns. And certainly in 2021, the only real major country in which the people have a significant number of guns is the United States. Of course, the United States also has the world's quote-unquote most powerful military. So it's a kind of, private escalation, public escalation, right? It's the same arguments, all those years about, if the cops carry 6 shooters, then the criminals buy autoloaders, and then when the cops buy autoloaders, the criminals buy submachine guns, and blah, blah, blah. And there's always this constant escalation in order to preserve their marketplace, their market share. And it's always about violence protecting market share. And I know many of you, and I've ranted about this in recent times, many of you are not crypto bulls. You don't believe crypto is money. You don't believe crypto has the ability to become money. You don't believe any of these things. And that you do believe that these people have enough power to enforce whatever they're going to do. And you may be right about that. This is a reason why we're still invested in gold and why I tell people you should only own physical gold, and I'd stay away from all versions of tokenized gold. I don't think that's actually, I don't think that's a future and I'll tell you why. The reason why tokenized gold is not a future is because tokenized gold is a single point of failure. I field many questions from many of you asking for gold vaulting services, and I have a particular person in mind who, if you feel you need that sort of diversification of your assets, I have that for you. I have a resource for you that you can avail yourself of. There are plenty of gold vaulting services out there. But my foundational position on this, from a philosophical perspective, goes all the way back to Neal Stephenson's Cryptonomicon. If you've not read Cryptonomicon, I absolutely recommend that you do so. It's entertaining as hell. It's fun. It's a crazy adventure ride, but at its core is a very, very, very serious as cancer discussion about how to reboot the world's monetary system at the end of the age of central banks, or reboot the monetary system and create a viable alternative to the central bank's system. And I can tell you that the whole story, and this is a 25-year-old book, so I ain't giving anything away, spoiler alerts, or, the statute of limitations on spoiler alerts is, in my mind, about a year. So this 25-year-old book or more, I absolutely recommend you read it. the whole story comes down to how to take an unknown stash of gold that doesn't exist in anybody's understanding, is anybody's understanding of the size of the gold market, and sequester it in such a way that no one knows where it is, and so that they can issue new money to challenge the existing order. That's the story of Cryptonomicon at its core. Now, it flips back and forth between modern day and World War II, and there's a unbelievably funny scene with General MacArthur in the Philippines, and it's crazy, and it's awesome, and it's fantastic, and it goes into the bone freakers and all this stuff, and that to me is foundational, because ultimately, even that system is metastable. No matter how good you are at anonymizing or stashing your single point of failure, there is always a single point of failure. And it's why the calls for any form of centralized tokenization or tokenization of any kind of centralized asset is nonsense. Because at the end of the day, these people have guns and they'll just go take all your money. They'll take all your stuff out of your vault. When I recommend physical gold to people, I recommend geographical diversification, just like any other rational, person recommending gold. You can always tell a person who's trying to scam you in the gold market. They'll tell you, they're always telling you, put your eggs in effectively one basket. But good ones are not. They're telling you, look, you might need to have some money in Switzerland, and you need to have some money in a vault in Brazil, and then you obviously have your home, your stuff at home, and blah 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 blah, and then you have some gold exposure on your 401k, and you have this, and you have your risks geographically diversified just as much as you should have them asset diversified. Because political risk is something you actually absolutely in every way, manner, shape, or form have to account for. And I understand that members of the audience do not believe that crypto is worth the political risk. I get it. I'm not going to argue with you. But what I will tell you is that at the same time, are you willing to take the political risk of gold and owning a gold mine in a place like Canada, which is going full commie? I'm having a hard time with that. What happens, we have a position in the portfolio that's in British Columbia. So there's political risk there that the mine gets nationalized in an extreme deflationary event. I don't think that risk is particularly high, because I think what they're trying to do is minimize the impact or the effectiveness or the value of gold in the new monetary system that's coming. I'm telling you that what I've always advocated for you is that you can be wrong. And that's why you should be diversified across asset classes, and you should be diversified across geographies. And Bitcoin represents a means by which to create to mitigate geographical political risk, because it is boundaryless. That I don't think is, as somebody just emailed me about, crypto boosterism. That's just reality. Okay? Even though we all know that there are real issues within the crypto space from a liquidity perspective, from a potential fraud perspective, and all the rest of it. It's all out there. 95% of the projects are nonsense. Tether is a stable coin that is very much of a hinky nature. I get it. But, Tether went through this stuff in 2017, and I hear the same arguments about Tether today that I heard in 2017. And, when Tether started to break the peg and there was a run on Tether, guess what happened? Somebody ponied up a couple $1 billion and saved Tether's ass. That's what happened. Today, those numbers could be as much as $25 or $30 billion. Given the size and shape of the crypto market today, do you think somebody's not going to pony up $25 billion to save Tether? You'd be dumb if you didn't. I'm sorry, but you'd be dumb if you don't think that. The market will stamp out fraud if it's allowed to operate, and everybody's incentives are still in place. If Tether's a fraud, it will either fail, and that liquidity will turn to other forms of stablecoins, which gets me right back to what I was talking about with what these central bankers actually fear. They don't fear Bitcoin. They fear the stable coins built on top of a hard foundational asset, be it Bitcoin or gold or anything else. Because at the end of the day, today they run a stable coin called the US dollar. It's built on a derivative of their ability to issue sovereign debt. Okay? They run a stable coin called the euro and the Japanese yen. They soon want to run a stable coin called the US digital dollar, built on their ability to levy taxes. They're all stable coins at some point. That's what they're worried about. They want to be able to issue fraudulent money with no backing and then say, yeah, well, it's still going to circulate at par, and they get to print the money and spend it first. And then we still have basic, everyday, boring old Cantillon effects, which is exactly what the arguments against Tether are. And that's fine. Well, it's not fine. It's terrible. I don't think Tether's a fraud. And even if I think Tether's a fraud, I also, if that's the case, I also don't think Tether's got a lifespan of more than 5 years. Which is why I'm fascinated by watching some of these algorithmic market making and stable coins make their way into the marketplace. And then the trust and validity of those systems accretes value over time through the validation of each continued block in the block and each block in the blockchain. That's the point. And this is not an emotional argument. This is the way things can absolutely go. Would I prefer gold to be the foundational asset of the new monetary system? Absolutely. Do I think that's going to happen? No. I wish I was wrong, but I'm not going to be. That's just the way and in 10 years, I'm going to be right about this. And I'm putting my bona fides on the table. I'm putting my reputation on the table. I'm going to put all of it on the table. But it also means that it's important, and this is a preview of some of my commentary for this month's issue, which is that, let me ask you something about gold. Those of you who bought gold back, like I did back in 2005 or 2006, expecting there to be a housing crisis or a liquidity crisis in the U.S. markets and housing markets, or whatever reason you bought gold for, you bought it after the financial crisis. What was your time horizon for getting out of gold? More money that was flowing into gold, dollars that were flowing into gold were a third of the dollars that they were worth. The money that was flowing into gold in 2005, 2006, while gold was at $400, $500, wound up being less than a third of the money that flowed into gold, right? By 2014, when it was trading at 1,300, it would have broken down back to 1,300. Right? What was your time horizon on holding on to those gold coins? A year? 3 months? 6 months? 5 years? 10 years? Were you going to will them to your kids? The question in front of you today is, are you willing to hold through all of the shenanigans and the breakdowns and the winnowing out of the frauds within crypto? Because the more people that do that, the less power people like Christine Lagarde have. It's that simple. It's the same argument we made about gold back in 2005, 2006. And I'm hearing the same arguments from gold bugs today and people who are involved in the gold and in some form of gold architecture today. And I got news for you. Christine Lagarde's never going to allow gold to circulate freely. If anything, they will let the price of gold rise when it's in their favor to let it rise. And right now that is not in there. That is not that, which is what I'm going to get you to the charts, and I'm going to try and shut up and get you out of here. All right. Rant over. I'm going to go through the charts real quick. Gold followed through on last week's horrible bar that I yelled at you about last Sunday. That prompted many of you to get kind of angry with me about my my crypto position. Reality is gold is now setting up for a move back to 1750 if we close below this low at 1992 this week. The US dollar is strengthening. I told you a week and a half ago, I think on a Wednesday market report, that the dollar was showing signs of strengthening and that everything has changed now that we've gotten past Donald Trump's ability to put a further monkey wrench into the political instability here in the United States, that the markets were going to, US dollar markets were going to stabilize. I wrote an article about it yesterday. You can go over what I think is going on. Just technically, this is what I think is happening. Gold is going to continue to get whacked, and they're going to whack it hard. They're going to whack it harder than you want it to be whacked. They're going to whack it harder than gold should be whacked, given the situation. They already have. This bar is horrific. For those of you who are new in the audience, this is a 1-bar bearish engulfing reversal signal. This is terrible. 1 bar because it happened within the last bar of the previous uptrend, engulfing because we broke both the previous high and the previous low, and a bearish reversal signal because we closed below the previous low. And all that happened within 1 week, and it happened after gold challenged previous horizontal resistance around 1960. So it peaked. It took a peak at the breakout point and then collapsed to $100. Terrific. I mean, we got follow through this week. Now, did we get really bad follow through this week? No, most of the action was already here. Most of the damage is already done. Now the question is there real psychological damage done in the gold market that will set it up for a move back to 1750? Well, now we'll know this week whether that's going to happen. Silver, similar thing without as dramatic a situation, because silver is in a slightly better technical position. The black line represents a kind of average true range for this consolidation period. This is all consolidation now, right? But are we going to move back to 22 in silver? It's very possible. This low here, which I did not identify for you, it's just below $24 an ounce. That's what you need to be looking for this week. Preferably, we want to see that the low from this week holds, and we get a series of higher highs and higher lows, and we don't even approach this low. If so, then within the context of this broader consolidation pattern, we're seeing higher highs and higher lows. That's a bullish sign. Eventually, we'll get a breakout to the upside, which will close above this high here first, and then close above this high to close above this high. Okay? We're going to keep it nice and simple. Okay? Bitcoin. Last week, we had a run on Bitcoin right into the close. The runaway train is now stalled. It's at a sighting. And now we have to watch the $35,000, $36,000 area. And I'm not telling you that it's impossible that Bitcoin doesn't go back to 20 grand and test the breakout level, which is the previous all-time high at around 20 grand. I'm not going to argue this. Again, oh, by the way, right around 20,000 in 2017 was when all the articles about how evil Tether was were reaching a peak. And guess what? Somebody ponied up a few $1 billion to allow Tether to continue running, and then, the whole market went through a bearish correction, yada, yada, yada. Okay. The question is Tether the tail wagging the dog, or is Bitcoin a runaway train because of unprecedented political instability? That's the question you have to ask yourself. Choose. But right now, they're telling you gold's not going to be a safe haven for you while you're scared. You're not going to get any comfort here. Holding gold will be cold comfort unless you've got money on the sidelines, unless you're constantly, dripping money through, high yield stocks into your account with cash in order to buy gold on the dips. Which is what I've always recommended to you. What the gold portion of the gold goats and guns strategy is. High yield as a proxy for savings in order to get the cash necessary to then deploy either into other ways, either to expand your cash portfolio by reinvesting in those particular stocks, or transferring that money out and putting it in, some of the producers or the hedges that I also have in the portfolio as well. It's a strategy, and I want you to think about it strategically. We're going to get back to more of that in the newsletter as we go through 2021 because it's incredibly important. So Bitcoin so far this morning, and this is last night's trading to this morning, looks weak. We'll see. This low is going to be very important. This is a parabolic uptrend. This is a near-term blow off top. I think that's already been, it should now in your mind be established as this high at around 42,000. Probably going to be it for now. The question is that going to trade sideways and build a new base? Or is it going to collapse and establish a new low and a new consolidation period and then move higher? Most likely, we're going to not consolidate. Most likely, we're going to correct into the $20,000, $25,000 area. Get everybody prepared for it now. That's why you watch this area this week. It's going to be very important. Now, I told you last week on Wednesday that the rotation trades will begin, that people aren't done making money in crypto, even if Bitcoin has peaked. What will then start to happen is we will start to see people moving out of Bitcoin and into other assets. We're going to move into other assets within the crypto space, hoping that there's going to be a rotation and a secondary peak where they can make money on the bounce. Now, I've got two charts for you today. I got two slides for you today going through this. So the first thing I want to do is I want to formalize by saying I'm going to add waves into my regular rotation of crypto assets I want to look at the price action on. And the reason for that is because waves is a counter to the arguments against Tether. Waves has an algorithmic stablecoin as opposed to Tether, which has a bunch of dollars backing it. And the question you have to ask yourself is, the money that's flowing into crypto now, does it want to come out of the crypto space and move back into the fiat space? How much of that money, what's the percentage of that money that wants to move into the crypto space and not move out of it again? I don't know what that number is, but I can tell you that the number is higher than it was in 2017. Now, so much of the commentary that I see from people who are, I don't know, this anti-crypto, is that they're thinking in terms of what's your exit strategy back to the dollar? What if your exit strategy isn't back to the dollar? What if your exit strategy is I want more of my assets outside of the dollar system and I don't have enough? Or maybe I want all of my dollars. I want all of my savings outside the dollar system. Now what do I do? Where do I put my money? And maybe that's a religious position. But right now, with what's going to happen, I'm not telling you to sell all your stocks, obviously. I'm still telling you that you should have, I think stocks are going to do very well in this environment. So what's interesting here is that Waves, I think I mentioned this a couple of weeks ago, that Waves was with adding Tether to their decentralized Forex platform, a way to stake Tether alongside their own stablecoin called Neutrino. We had a bit of a bank run because there was a huge discrepancy there was a huge arbitrage play, and we saw Waves while everything else was peaking. Waves was getting hit from $8 back down into the $5 range. I don't have volume here, but the volume here got immense in the $5 range. It's huge support at the $5 level for this, and then saw the bounce. Now we saw it give a bounce. Now huge volatility during the collapse ran a peak all the way up to 759. Technically speaking, we still haven't thrown a reversal signal here, but truth be told, other than this little bit of trading right here, right now, this could easily be considered a reversal and new uptrend. Now, this is all last night's trading. Something happened last night that pushed Waves up to like 75 cents in like an hour. Huge volume came in. Like a day's worth of volume or 2 days worth of volume came in an hour. So, and bought indiscriminately, pushing the price from the 660s up into the 730s, 740s. So we're going to watch that this week. See if we get a close this week above the 760 level. That would be interesting. This is a very interesting and emergent system because with the Russians having real crypto legislation and Waves being a Russian project, which already has ties to the Moscow exchange and to the banking system, which it does. It has contracts and agreements with the Russian system, Russian financial system. This becomes a very interesting early stage, well, not early stage, but now interesting project. And it's also a potential project to be a competitor to Tether. Now, it's very small in comparison. Don't get me wrong. This is enormously early and enormously risky. And I don't make any bones about that. But this is a very interesting project. And interesting the way it's reacting right now. Okay. I told you altcoin rotation would probably happen once Bitcoin hit its peak. Well, here we are, 4 major cryptos versus Bitcoin and their pairs. So here's Waves. This is what happened here. I think this is a major project that's going to move in the grand scheme of things, because I think the Russians are going to be a very pivotal player in crypto going forward. Look at Decred, another store value coin that, again, doesn't rely at all on Bitcoin or Tether at all. No one trades. Most of the trading done in Decred at this point is done on its own distributed DEX versus Bitcoin directly. Is it traded versus dollars? No. Are you going to be able to is it going to be easy to get your money out of that system? No, you're going to have to go through Coinbase and yada, yada, yada. But if you're setting up for a long-term store value, this pattern is looking like it's just ready to massively break to the upside. Ethereum doing the same thing. Remember, these are all daily charts, FYI. We rarely ever put daily charts up, but in order to see the dramatic effects, to see what's happening in these last few days since Bitcoin hit its peak, you can see what's happening here. Same thing's happening in Ethereum. We had the highest daily close in the Ethereum BTC pair in months, well above this high here. So technically speaking, a break above 35,000 sats or 350,000 sats right here would be a very interesting move in Ethereum. Again, if people are moving out of Bitcoin, they're moving back into dollar or fiat stable coin assets, right? Because they think Bitcoin's peaked. Well, then Ethereum is going to rise, and so are projects like Waves, because people are going to be sinking money into those systems in the short term to pull a yield, wait out the carnage, and then buy the dip, right? And so now there's a place. Unlike in 2017, where everybody had to go back to dollars, now there's a place for that money to sink into and accrete value across the blockchains. That's what's different today. That's why I also ultimately think Tether is going to fail and no longer be the sort of Damocles hanging over the crypto space. And then the last one to talk about is Dash. I think it's also interesting what Dash getting off the floor. It got hit. I think Dash was never meant to break down this low. This was the reaction after Bittrex delisted it after the SEC hit on Ripple. So either there wasn't enough Dash in the system and Bittrex was trying to force some liquidations in order to shore up their accounts, which is partly what I think was going on. We now see Dash having recovered back into the 130s against the dollar, and it's recovering versus Bitcoin as well. Okay, enough about crypto. Let's talk about the euro, because the euro is actually the most important thing I think that's happened this week. I've got the weekly chart of the euro here today. I've got a lot to talk about. I told you that we would probably see in January some quarterly rebalancing starting post-Brexit as people liquidate some of their euro long positions, because we have political stability in the U.S. now. Biden's going to become president on Wednesday. Sucks, but he is. Okay. And everybody's going to make their moves according to that. Whereas we have a problem in Italy. We have a problem in Netherlands. We have a problem in Estonia. We're going to have problems in Greece. I've got a podcast with Alexander Mercouris I just recorded yesterday. We go over a lot of this stuff in detail. Okay. It'll be out Tuesday morning. Nothing untoward will happen between now and Tuesday. So when you guys, when it goes out the door, it'll still be, everything we talked about will still be timely. And we go into have a lot of discussion about what's happening in European politics to set up what I think is going to happen in the euro this year. So the big thing is the breakdown this week in the euro. It broke down below all these lows in here, meaning this uptrend is over. And so this is an exhaustion move in the euro to the upside, and then a big breakdown. The rotations back into the US dollar are happening. The euro dollar markets are expecting rate hikes. There was a great article on Zero Hedge earlier in the week about the euro dollar markets are now pricing in rate hikes. Not that I think that the Fed is going to hike rates, but the market is beginning, the euro dollar markets are beginning to price in that as an option. Okay. The US 10-year has moved solidly above 1%. And if it closes, the month of January in its current level, it's very possible that we're going to see that move in 2021 back up towards 2. And that means that we're going to see a breakdown here in the euro. Okay. And the ECB will continue to buy as much sovereign debt as possible. But what I want you to watch for this week is a continued move back towards, the low at 119.26. I think that would be the November low, and it should be the November, or might be the December low. Watch for that move. This is the December low. Watch for a move below that. That would be a 1-bar reversal on the monthly chart, and that would be immense. That would then propagate this breakdown here through time. It could also bounce off of 119.26 and move higher again. We'll see what happens, but a lot of that's going to be determined by what we see coming on a policy front. I think it's about time I talk to Ira Harris again about what he sees on the horizon for the ECB. So when I get done with this, I'm going to send an email to Ira and see if he wants to chat for a podcast coming up. All right, so that's the euro. Let's watch that very carefully. And then we get back to the Dow Jones. I said a couple of weeks ago that I think a fear trade is beginning to emerge in stocks all the way across the board. Russia, China, the US, Germany, even the Brits to a greater or lesser extent. They don't know where to put the money. They're beginning to pull out of bonds. The central banks are having to spend enormous sums of money to hold the bond rates where they are. And we're seeing that some of that money, now that the stimulus money is starting to come out, we're starting to see some of it move into stocks. The rotation out of U.S. treasuries, we're starting to see some of that money move into stocks. Interestingly, it's not moving into gold. The decoupling between stocks and gold. Now, is it a real decoupling or is it a false move created? I don't know. But if the dollar is, bouncing, then people are going to sell their gold long positions and raise cash. And so is there something else going on in the gold, from that perspective? So that's where we are. This week's trading in the Dow was really non-committal, just kind of testing, didn't even test the breakout level. I think it's an outside bar. We definitely broke last week's high on what looks like, this is supposed to be normal volatility. This is what a normal week in the Dow is supposed to look like, because these two numbers sum to just about 100%. And these are when the market is acting normally, that's the size of the bar you should expect. We should see about 700 points from the low to the high. There's about a 350 point move from close to close, and the probabilities of breaking either the previous high or the previous low should sum to 100%. And we're at 101. So that's about as normal 1 sigma a bar as you could possibly get in the Dow. And we were off a little bit this week, but it's no technical damage, and certainly no monthly chart damage either. If anything, holding in this area through the end of the month sets up, a continuation of the existing rally in stocks. So again, place your money where you think it should go. So, all right, that's what I've got for you today. I know it was a lot. I'm going to cue them, and I'm just going to shut up now and get out of your way. I'm going to cue the music, and you guys be well. You take care. You keep your stick on the ice.